Do not ever let your parents give you their house. Do what the rich do instead. Baby, I decided to go ahead and retire, so I'm going to go ahead and give you that house now. That is so sweet, but don't put that house in my name. What? Do you not want the house? Of course I do, but you've owned this property for a long time and the property value has increased tremendously. Which means if you put the property in my name today, I'll be responsible for all the capital gains tax when I sell it. Look, girl, it can't be that bad. Mom, when you bought the property, it was $50,000 and now it appraises at $500,000. So when you put it in my name, I'm going to be paying over $88,000 in capital gains tax. That's a lot of money. So what should I do? Instead, create a living trust and make me the beneficiary. So when you pass, I can inherit through the stepped up in cost basis.
How do the rich keep generating generational wealth for their kids? Recently, I did a video on how I lost my dad. My dad was 58 years when he died. And as at the time he was alive, he did very well for himself. He had about 4 houses, which right now, if I'm to look at the average amount of those properties, all of them are in their millions because he bought them in very good locations. And based on the value of those properties at this point, we would have had generational wealth passed on to us. Like I said the other time, it's not just about accumulating wealth or generating wealth. It's about the ability for you to transfer the wealth to your kids and your kids transferring it to their kids. So that is the idea, or that is what I am really passionate about, because getting to have wealth and losing it, I don't think that's the purpose of generating wealth. We all want to make money or generate wealth and transfer it to our kids. Before I go ahead, I would like to state that I am not a financial expert, neither am I a CPA or a lawyer that can give you concrete advice. So you need to also do your own duties by talking to your lawyer, your CPA, to see how these things apply to you. But I'm going to focus on few areas I have been doing or I'm going to start doing. How can we generate that wealth? And after generating it, how can we now pass it on to our kids? So this is what I'll be talking about today. How do the rich generate wealth and transfer it to their kids? I'm going to limit my talk today on multifamily because if you know me, you know I talk everything multifamily. And that's where I passionately invest in. So how can you generate wealth with multifamily? Some people don't understand it, especially when they get to see like $1,000 in their account after a quarter. They will be like, how can I generate wealth with $1,000? So let me just break it down. First of all, I'm going to break it down from the beginning, how you can generate wealth yourself and how you can now transfer it to your family or to your kids and all that. First of all, I invest in multifamily. What is multifamily? Multifamily is just a group of properties located in one area, and you are maximizing that benefit of the location. Because they are in a place, you can as well bring one property manager that will manage the entire thing for you, and you make income and you will pay your expenses from the income, and the remaining part of it becomes your expenses. It's that simple. So in simpler terms, it's just a group of properties in a location. You are collecting rent and using the rent to pay off the operational expenses like your utility bills, your taxes, your insurance. After paying your lender, the remaining part of it becomes cash flow. So how do you now generate wealth with just cash flow? So the beautiful part about multifamily gives you multiple streams of income, like I always mention, like cash flow. So while you're holding on to the property for a particular period of time, typically multifamily is structured in a way that you have to exit. It's not like the single family where you have a mortgage loan that is for 30 years. But for multifamily, it varies between 2 to 15 years. It can be more than that because the idea is for you to exit, pay back your loan, and if you want to sell, you sell. If you want to refinance, you continue and all that. So that is a strategy around it. So back to what I was saying about how do the rich make money using multifamily. With cash flow, you get that money during the whole period. And if you've been able to execute on your business plan, that is, maybe you've increased your rent, you've done some things and the property has appreciated, it just means that after a period of time, the property's value would have increased. So that is one beautiful thing about multifamily. It appreciates. But I personally do not underwrite or purchase a property for the sole reason of appreciating. While I'm holding on to the property, I also want to have cash flow within the 5-7 years. 5-7 years is a lot of time for you to say no cash flow, I'm just waiting for a property to appreciate. And another thing is you cannot bank on the future. What if the economy changes? What if the value of the property goes down? You know, those things. But with cash flow, it's consistent. You'll be able to accumulate good amount of of money with it. And the third thing is by tax benefits. So with multifamily, you can use the passive losses that are given to you in the form of K1s to write off your tax liabilities. Like I always say, please talk to your CPA to know how you can structure your household or structure your business to be able to take the best benefit from investing in multifamily. So how do we make money with just your quarterly cash flows and your appreciation? Typically, these deals, if properly done, you can get as much as 2x. So if you've invested 100,000 throughout the period, you might be able to double it to 200,000. While you've invested 100,000 on the deal, you can use that same 100,000 to invest in another deal. So with $100,000, you can generate compound wealth. You can generate a lot of wealth from it. So let me explain how that works. So I have a deal and I've invested 100,000 in that deal. And that deal, let's say the business plan is for me to exit twice. When I mean exit twice, I mean that maybe in year 3, I'll have to refinance, and maybe in year 6, I will sell. So if I'm exiting twice, that means there's going to be a capitalization done twice on this deal. So maybe the first plan, the reason why the owner or the sponsor of the deal is saying that in year 3, I'm going to recapitalize, I'm going to refinance, is maybe he will be able to execute on his business plan and whereby improve on the value of the property. And with a very good market surrounding, that is maybe interest rates would have been low at that time and the economy is good, more demand for housing and that is in place, then the sponsor or whoever the general partners of the deal can now decide that in the 3rd year, let's refinance. And they're doing that to refund you your initial investment, maybe 100% of it or some part of it. If they refund you at the time when they are refinancing the property, maybe they were able to improve on the property so much more that they were able to get a lot of money and they were able to pay back their down payment. Their down payment comes from investors like you and me, which is done through syndication. Syndication is whereby a pool of money is put from different investors and that money is taken as a down payment to buying a property. For example, if I buy a 10 million worth of property, the bank will fund, let's say 7 million of it. I will have to raise 3 million. So I will go to people like you and I and raise the remaining 3 million and use it for down payment. So when I refinance, maybe I've been able to improve the property so much that it's about 15 million from 10 million that I bought it to 15 million. I'll go back to the bank and say, bank, I've been able to improve on this property. Now it's worth 15 million. The bank will go and do their assessment and they will come back and say, agree or not, and say, yes, it's worth 15 million. So I'm going to give you 70 or 75% leverage on that 15 million. So what you'll be giving to your investors will be the profit between what you owe the bank and what the new loan will look like. So the difference between it is what you have and you can distribute to your investors. So let's say, assuming you were able to raise the total 3 million after the refinancing and all that, you were able to pay that back to the investors, then that means the investors can take back the original 100,000 that each of them have invested and decide whether to take that money and invest in another deal, whereby they still remain on the deal and still keep collecting cash flow throughout the remaining 3 more years. Remember, I said the deal must have been a 3-year refinance and a 6-year sale. So throughout the 3 years, they have no money in it. That is, their 100,000 has been funded back to them at 3 years, and the remaining 3 years, they are now going to use it to just enjoy and be collecting money because they don't have any money in it. Then at the end of the 6th year, the property is sold and they get additional profit from it. So that means they've gotten their initial capital at the 3rd year and gotten more profit at the 6th year. So with that, if I were an investor, I would take my initial profit that was given to me and take that money and reinvest it in another deal and do it all over again and all that. So these are some of the ways the rich generate wealth. When you do that, you've generated double. Depending on the amount you're investing with a good sponsor, we like to emphasize these things can only work with a very good, experienced sponsor. If you're investing and the sponsor is able to achieve this type of goal to you, you can decide that I want to transfer this wealth I'm generating with my multifamily in several ways. So one of the ways I've been able to identify how I can pass on my wealth to my kids while I'm alive and also do when I'm gone, first of all, like I always say, education is very important. You cannot take so many decisions without speaking to a lawyer or your CPA. So I had a sit-down discussion with my lawyer, which you should do, and ask them, depending on your situation, they'll be able to advise you on the strategies to do. But some of the ways I've been able to identify how I can pass well to my kids are: one, the step-up basis. The step-up basis is when someone dies, the wealth, your property or whatever, business, it can be stock, it can be multifamily, it can be any form of thing you own, can be passed on to their children. If your kids are able to sell those things, like I give them a house maybe worth 10 million, I give them that house worth 10 million, and they're able to sell it within the year I died, then that wealth or whatever it is that they've sold it for might not be taxable, or you might be able to reduce taxes, or it might be zero tax at that point. But if they continue carrying on the property after I've died, and the property has been able to accrue wealth, maybe if the person dies in 2023 and they were able to sell it in 2023, yes, then that is applicable to them. But if the person, children, decides that, oh, I don't want to sell this property, I want to keep managing it, then at the time at which you want to sell, if the property has appreciated, then that's different. The capital gain in it is subject to tax. So you want to do this as well. You can do the step-up basis with your kids, educate them on how they can do it when you're gone and all that. So that's one. Another strategy that you can use as well is by gifting your kids. The IRS allows you as of 2023 to give a maximum amount of 17,000 to your kids. So let's say your kid is 5 years, you can decide to do that continuously. Although in 2026 it's supposed to revert back to 6,000, except the Congress goes back and sits down and reinstates it. But right now, between now and the end of 2025, the maximum is 17,000. So you can use this tax strategy and save up by gifting your kids, your family members, $17,000 every year before 2026. By 2026, if nothing is done, it becomes 6,000. So in 2026, you can keep giving them 6,000 and all that. Another strategy you can use, which is called the lifetime exemption. This is a tax provision that allows an individual during the time that they are alive or when they are dead to transfer a certain amount of wealth to their kids. As at 2023, it was 12.92 million, and that is subject to change. So you can start doing that now. If you know you're very wealthy, you have more than that, you can quickly do that before it expires. I think in 2026, I'm not too sure, please verify, it's going to revert back to the original amount. But right now, you can transfer a maximum amount of 12.92 million to your kids, and it's not subject to tax. So that is how some of these wealthy people are transferring wealth to their kids. They are using those strategies. So for example, you can gift your kids 17,000 yearly. Let's say you gifted them 25, which has exceeded the maximum. How would that apply to your lifetime exemption? So if you gifted them 25,000 instead of 17,000, the difference, which is about 8,000, will be deducted from your lifetime exit. So remember, the lifetime exit amount is 12.92 million to be deducted from it, and it will affect your lifetime amount that you can transfer to your kids. So you need to watch that. You need to be very careful on how you apply your 17,000. Ensure that it's the 17,000 so that you have the lifetime benefit of 12.92 to transfer to your kids. And the idea is for it not to be taxable or to reduce taxes. So like I said, one of the things we want to do is to make money, grow wealth, and pay less taxes. So these are some of the tax strategies. There are a lot. We have family partnership LLCs. You need to consult with your CPA to know what suits you. The third strategy you can use is the trust. So you can put your property in a trust, and those properties can also help you benefit in this tax, can also help you reduce or eradicate your tax liabilities. And also the step basis, which I earlier explained, can also be applied to this, and you can use it at your debt. Your kids can use it and pay little or no taxes to the government. So these are legal ways in which you can generate wealth, not just generating it and passing it on. Like I said, we lost everything that my dad provided, not knowingly. It was either out of less knowledge, or in short, ignorance, or not even knowing what to do at that point in time. Or let me just call it education. We didn't have the education and all that. So now that we know better, now that I know better, this is one of the burdens I have, to ensure that while you are thinking to make wealth, because that's what so many people are thinking of. I want to make money, I want to invest, I want to do that. Hold on, wait. you also have to think of how that money can be passed on to your kids, not just your kids, their kids. So it's a generational mission that you have to start now to start educating your kids about wealth, because the more they know about wealth, the more they can pass on that wealth to their kids. So it's not just about you. You have a responsibility to educate your kids right now to start managing wealth in a little capacity, in a little way. I do that often with my kids. I try to tell them, we talk about different things in their own level. As they keep growing, I keep increasing the bar, and that is what you should start doing. You should not just be concerned about you generating the wealth. You don't want that wealth to be squandered. I hope these little tips I've given to you have been able to educate you and enlighten you about how you can grow wealth and how you can transfer it. I look forward to hearing from you if you have any questions. Thank you and have a wonderful day.